Now, speaking of prices going up, we also got some inflation data that day as well. We got the December PPI numbers. We already got the CPI numbers for December. They were better than expected in that the increase was less than expected. And the same thing happened with the PPI. The consensus was for a decline of zero point 0.1, and instead we got a decline of 0.5. In fact, that was a bigger decline than even the biggest decline expected because the range went from up zero point 0.1 to minus zero point 0.4. So this was good news for the markets. In fact, the year-over-year PPI number, which was 7.4% in November, it was supposed to drop to 6.8 in December. Instead, it went all the way down to 6.2%. Now, ex-food and energy, that number matched expectations. It was supposed to be an increase of 0.1. We got an increase of 0.1, but that was a reduction over the increase of 0.4 from the prior month. And year over year, ex-food and energy prices are now up 5.5% on the wholesale level versus 6.2% the prior month. So the markets liked this number, and that was part of the reason for a rally that day was the reaction to this better than expected news on inflation. But you have to remember that all this better than expected news on inflation is transitory. So it wasn't the increase in inflation that was transitory. That's permanent. What is transitory is this slight decrease that we're enjoying now. And again, prices are still going up. They're just not going up as fast as they were. But all of that is temporary because the reason that we saw a decline in the rate of increase in prices was because we got a correction in commodities, in particular oil prices. We've also got a decline in longer-term interest rates that has affected mortgage rates and probably other debt payments that are being made that is helping to reduce somewhat the rate of increase in costs that businesses are experiencing. But all these factors are temporary. Commodity prices have already really reversed their decline. They're on the upswing. And in fact, one of the reasons that we got the big drop in commodity prices was the strength of the dollar. But the strength of the dollar completely reversed in the fourth quarter of 2022, and that weakness has continued in the first quarter of 2023, and it looks like it's going to continue not just for the remainder of the quarter, but for the balance of the year. I still think that 2023 could end up being one of the worst years ever, and maybe the worst year ever for the US dollar, and that weakness is going to help propel consumer prices much higher. And so I believe that after this transitory reduction in the acceleration in the inflation rate, I think we're going to head higher again, and that before the year is over, we're going to be printing year-over-year increases in the CPI that will eclipse the high from last year, which I think was 9.1%, unless, of course, we rejigger the CPI before then, so that in the future, the CPI will understate the rate at which prices are increasing by an even greater margin than the rate that it understates it right now. Then yesterday, we got the Philadelphia Fed Manufacturing Index for January, and this one wasn't weaker than expected. It was actually a little bit less weak than expected, but it was still a weak number. The consensus was for a minus 10.3, and instead we got a minus 8.9. And the prior month's minus 13.8, that was revised to a minus 13.7. So a tad less weak than was originally reported, but this is still a weak number. And then today, we got a very weak report on existing home sales. Even though the number was slightly better than estimates, it was still a weak number. The consensus was for 3.97 million homes to be sold during the month, and we actually sold 4.02 million. The prior month's 4.09 million was revised down slightly to 4.8 million. But the month-over-month decline was minus 1.5%, and that was an improvement over the upwardly revised minus 7.9% from the prior month. And the year-over-year decline was 34%, and that was an improvement, again, from the upwardly revised 35.5% decline year-over-year in November. But since the 34% decline represents the entire calendar year, 2022, it's even more significant because the 34% decline in home sales in 2022 represents the single largest drop in home sales ever, at least as long as they've been keeping track. Now, that is significant because that means the drop is bigger than it was during COVID. It's bigger than it was at any point during the 2008, 2009 financial crisis, Great Depression. In fact, it's bigger than any year during the Great Depression if they were keeping track of the numbers back then. I'm not sure, but this is a very significant decline, and it also has very ominous implications for the economy in 2023 because a lot of economic activity that shows up in GDP is related to home sales and the turning over of homes. But to the extent that homes are not selling, people are staying put and they're not moving to another home, then that's likely to have a negative effect on GDP. So all those people that are still clinging to the false hope that the economy is going to experience a soft landing are not reading any of the very bold uppercase letters clearly written on this collapsing wall. In fact, while I'm on the topic of clueless people who can't read the writing on the wall, this week featured the annual party that goes on in Davos, Switzerland, every year when you get a lot of very wealthy people along with leading politicians and central bankers from around the world. They all converge on one of the most expensive ski resorts in the world during the height of ski season to really have what amounts to a party, a paid vacation. I don't mind if private individuals and companies want to waste money sending their people over to Davos to party and ski, but I have a big problem when it's government officials or central bankers who are going to this party on the public's dime. That is a disgrace. It is a complete waste of money. The people that think anything is getting accomplished at Davos are clueless. Nothing is happening at Davos other than maybe backroom deals that might benefit some of the people who go there, but they certainly don't benefit the people back home who couldn't even afford to get to the party, even if they got an invitation. I remember Davos back in 2008, and this is just months before the financial crisis when there was plenty of evidence that a financial crisis lay dead ahead, and these guys had no clue. Nobody was worried about it. Nobody was talking about it. In fact, one of the most frustrating parts about what's going on in Davos is the hypocrisy, because you have a lot of very wealthy people that flew into Davos on their private jets